We've got interest rate decision looming over in Nigeria tomorrow. What are your expectations on that front and the kind of impact it can have on the equity space more specifically?
Well, Alishia, good morning. We're expecting that tomorrow. I don't expect a definite change in the interest rate. I don't think I should expect any large change. I'm optimistic that the interest rate will remain as the same compared to what they had last month. I don't think there will be any change because from the last meeting the board, the CBN had and the MRS board, it realized that there's a little bit of activities in the economy now. And so banks have started doing a little bit of lending. And so it's helping the economy. And moreover, AMCOM has come to be. And if AMCOM has come to be, then there will be a little bit of not so much pressure on the banks also. So I think going forward, the interest rate may remain the same on its impact on the equity market. Of course, we don't expect so much impact on the equity market because the impact is already felt through the establishment of AMCOM board at the moment. So we'll wait and see what the MPR will have to say this week.
Of course, this in a context where now we've got investors looking to a full 5-day week this week. Let's start off with your broad expectations in terms of trading activity, where even with the 3-day week last week, we had trading volumes standing pretty solid.
Yes, you expect that. There's good report, there is good optimistic, there is confident in the market at the moment. The results that have been turning are impressive. AMCOM has come to be. AMCOM actually will start buying any moment from now. In short, they've pegged down the price of the rescue bank as per Monday. They will buy a 60% premium. So when you look at all these, investors' confidence has come back. There's no so much of people trying to sell off their shares to pay up for their loans any longer. And then and the banks are going to meet and try to look at the way forward. And the result has been impressive. Looking at some of the results that came in last year from one of the banks in Union Bank, it has been an impressive result. So when you going forward, you realize that there's a lot of activity in the market. There's a lot of confidence coming into the market as a result of this AMCOM board, and there's a clear policy statement on the way AMCOM is going to go. So I think it's helping investors have confidence in the market.
How are you positioned within that sector right now? Because enthusiasm seems to have increased money flow, especially into some of the bailed out banks.
Yes, somehow enthusiasm have increased, but most of the people that are going into this bailout bank are speculators, and some of them have started taking profit. And you can see that some of the banks were among the major losers last week, in the last 3 days of trading last week. So we expect a little bit of stability from the bank this week, and knowing that some people were taking profit, some have made as high as 100 and something% increase in some of these shares. So optimistically, I think going forward, we'll see a better performance from this rescue bank this week, and knowing that there's a little bit of stability in the bank, and the results that have come in from the banks are good. So I for one think the rescue bank are still a little bit dodgy for now.
Especially with them being viewed as short-term trading vehicles, as you've highlighted more than anything else. So looking at weightings, how do the rescued banks compare to the more stable and tier 1 banks specifically in your portfolio?
Well, I'm more like going for the tier 1 banks because the tier 1 banks give a little bit of stability, a little bit of optimism in them, mostly with their profits that have come in with their third quarter result have been very, very impressive. And some of these banks have stable administration. Some of these banks have been able to increase their earnings and their earnings quarterly. And knowing that fully well that the year end of banks is December, and that by first quarter of next year we'll begin to see the results. So it's trying to position for the short term. I think the stable, the tier 1 banks like Zenith Bank, GT Bank, UB, First Bank are actually banks, and even Access Bank, a bank that you could look up to. Then for this other tier, the rescue bank, I still look at them as speculators, own share, anybody that has anything to speculate. But you shouldn't take it away from them that these are banks that have recovered in terms of their profit, but in terms of shareholder form, we are looking up to AMCOM to deliver them from there. Outside
of the banking arena, Muktar, where's your attention being cast?
Yeah, outside of the banking arena, I'm not taking my eyes off Guinness Nigeria and I'm expecting them to tell us what their Q3 result will be any moment from now. Nigerian Brewery came out with their own, and knowing fully well that we are going to the festive period. These are period whereby the Guinness and Nigerian Brewery normally do well because of festivity, and you shouldn't take your eyes off Dangote flour and Dangote sugar and Dangote salt too. And even Dangote Cement, looking at the expansion program that are going on in those places. And also you could also look at other stocks like Nestle also, which have told us that they will tell by the end of 31st of December, their payment day will be 31st of December. Though they've not told investors what they're actually giving, but when you look at the result, you know that they will pay up to about 12 or 13 naira to their shareholders. So you shouldn't take your eyes off these stocks. I think they are good stocks at the moment.
In fact, trades in Nestle accounted for 30% of the total value traded in the market on Friday. Nestle inched up towards the close of the session. Guinness as well, a total of 2.7 million units traded in that name on a Friday session. What's interesting, though, it's institutional purchases that's driving and behind much of the activity there, and lack of retail investment participation specifically. What are you making of that kind of dynamic?
Yes, Alishia, you shouldn't be, one wouldn't be surprised in what is happening in those one, mostly in Nestle and Guinness that you just said. When you're looking at the price at the moment, Nestle is selling for about 400 naira, and Guinness is selling about 188 naira at the close of market on Friday. So most of these are stocks that institutional investors take opportunity of, mostly because of the huge number of funds they have to buy a large quantity, knowing fully well that an increase of just 10 to 15% is actually it will have a very positive impact on their portfolio compared to smaller retail investors that still they are going for the stock that have they have buying capacity. Their buying capabilities a little bit over there. Like they still go to most of these small cap stocks like insurance stock, banking stock. But for these ones that are very conglomerate, I think the institutional investors that are more interested in them because they will be able to make more returns on them. And you shouldn't forget that some of these stock does not have shareholders that are ready to sell. Some of these stock are people that have been holding this stock for almost 16, 20, 25 years. They are not ready to let go of this stock. They enjoy the dividend payout from these stocks. And then you know at the share standing of these stocks too is also not as high as other stocks are standing. So when you look at that, you realize why it is like that for institutional investors.